Hi guys, Les here from BG Trading. Hope you're well, and today we got May here, which also work with us. And today we're going to be talking about how do we invest $3,000 on the stock market in Australia. Just first of all, this is not a financial advice, just want to remind everyone. So do your own research, just showing you guys how we actually use a BG trading strategies to maximize profits and and then grow a portfolio.
So basically what I did, I put together a list of the most asked questions that we have in our Facebook group and on the chat on the website as well, of people that had just started investing and they have a around $3,000 budget. So I'm gonna be asking Les to help us to figure out that situation, okay? So the first question that we get a lot is, when investing with a lower capital, such as $3,000, what's the actual impact of the trading fees in the profit gain?
So the overall investment.
Yeah.
Sure. So what I always suggest to our members is to look for a platform that is cost effective to trade. Okay. For example, if you go to the four big banks like CommSec or NAB investment platform, ANZ investment platform, they all range a similar price. So every time you want to buy it, you got to pay $19.50 to buy, $19.50 to exit, and depending on the amount you buy, if it starts increasing too much, then you pay a percentage of that. So if you only had $3,000 to invest, so go with the Self-Wealth, for example, which is just $9.50. It's a very simple to use, easy to use platform. And and as you grow your portfolio, then you can migrate to another platform, a little bit more complex platform like CommSec or Macquarie Edge or even CMC Markets. But to start with a low budget, just go with the cheapest and the most cost effective possible. And we don't have any, we're not sponsored by Self-Wealth or anything. We just think it's a great platform to start with.
Right. So another question that I get a lot from our members is, if you're investing at a lower capital, what should you do regarding diversification? Should you invest the whole amount in one trade, or should you look for other trades to diversify? What's the best strategy in that matter?
Sure. One of the things you always tell our members is that diversification is a key to succeed as well.
Right.
Okay, so there's a few elements that we have to consider. So diversification will ensure you mitigate your risk. You risk that you have a sudden crash in one stock for absolutely no reason. Sometimes stocks just crash because the market will panic, whereas the fundamental is still great. So what we do then, we diversify in 3 positions, 3 different shares, 3 different stocks. So, but most important, you got to make sure we diversified in 3 different sectors as well, not just the stocks, because you can be buying like Woodside Petroleum, Oil Search, and Santos, but all those 3 stocks are within same sector. So what happens is, all the stocks in the sector tends to move together. Once the hype comes up on a certain sector, we saw that in lithium a little while ago, cannabis before lithium, and then now with BNL again. So every time the sector moves, most of the stocks move together. So we want to make sure we diversify as well on that. So just to answer your question, that's what we would do.
And regarding the actual situation of the Australian market, what would you think would be nice sectors to invest, that they would fluctuate enough to reach the 20-25% goal, but not wouldn't be too risky at the same time?
Sure. So now when we research for as I do, when we search for positions,
right,
so we always make sure the fundamentals are solid. So we want to enter a position which has, in a company that has solid fundamentals and a good growth perspective as well, because that will ensure that even if the stock falls a little bit, sooner or later we're gonna go up again, because the fundamentals are there.
Right.
Okay. So great sectors at the moment, I would say undervalued sectors with good potential to grow would be the energy sector. So we are just we have a position on Oil Search. So anything within the energy sector looks pretty attractive at the moment. It's still trading probably about 35-40% below COVID crash. And then technology sector as well. It's being a little bit out of the investor radar. It's I'm pretty sure sooner or later investor will start jumping in the sector, and we'll see. That's when we see people formally as well. So yeah, so the technology sector, retail sector, the housing market booming, people not traveling, a lot of disposable income inside Australia. So a lot of people spending money in Bunnings and Temple Webster,
Right.
JB Hi-Fi, even Nick Scali is a great pick for this sort of sector as well. So diversifying those three sectors, and also there's other sectors as well, like consumer defensive, A2 like A2 milk, like consumer cyclicals. A2 milk got boobs as well, so companies that being really underperformed during China's boycott, which is still happening, but I believe sooner or later that should improve. But all these undervalued stock, they are great opportunities to enter into a very sort of cost-effective price.
Right. And then just one last question that we get a lot is, what's a good strategy to actually setting up targets when you're entering those trades? Like, how do you know if you should aim for 20-25% or more?
Okay, so this is a whole new content for a whole new video.
Right.
Let's try do as quick as possible. Just when we set up to enter into a stock, so we want to first thing we do in order to ensure we into a good position to enter, we want to make sure the stock is capable to swing enough to fulfill a BG trading strategy,
right.
To fulfill that 20%, 20-5%, or 30% if we target 30%. So so we want to make sure is we always set our target under a round number. Normally, what could be what we call psychological support resistance, which is a point which is very likely to attract a lot of sellers in there. So people taking profits or just short traders. So raw numbers like $10, for example, when the stock falls to $10, tends to be a bounce back support. The same way when the stock goes up from $8 to $10, tends to be a bounce back around this sort of range. Not exactly $10, but around that range. So we want to make sure our target is just under that sort of number. So let's say if you're chasing $12 exit, set up a target around $11.85. If you're doing $10 exits to make it 25%, so set up a target just under $10, like $9.85 or something like this, because that will secure that you actually able to lock in the profit before the correction comes on a share price.
Right.
Cool.
I think that was it. Thank
Fantastic.
you so much.
Hope you enjoy, and just keep following the channel. If you like, just subscribe to the channel and put a like for us. Thank you.